Welcome on board, Kimathi.
Thank you.
Now, to start us off, let's look at Access Kenya, which reported a 15% rise in pre-tax profits. What do you make of the numbers?
I think the numbers from Access Kenya were actually particularly good, especially if you compare them with last year's performance. We see very good improvement pretty much across the board, from the revenues to the EBITDA numbers. Those are very good numbers coming from Access Kenya. We even saw a decrease in terms of the forex losses, which had been quite an issue for Access Kenya last year around. So I'm quite happy with the numbers from Access Kenya. Looking at it also on a different scale, we see the number of users, the average revenue per user actually is beginning to come down, and that has been the trend for quite some time. But actually, I'm quite happy with the numbers they've put out. They hit that 5,000 mark level of the corporate list line connections. So Access Kenya, all in all, I'm quite happy with the numbers, especially when you compare them with last year's numbers.
Kimathi, another company to release results this morning was Kenyan Insurance Corporation, which reported a 40% profit before tax for the first half of the year. What's the analysis of this?
I think Kenya Re has actually been one of the stocks that has been quite undervalued in our market. For a long time, it's been trading at a PE of just about 3. And with these numbers coming out this morning, we see a very good performance in terms of the investment income, in terms of the cost containment, and also to their plate, there is the very good benefit of not having any substantial, huge claims coming out. So all in all, for Kenya Re, very good numbers also. And we're also seeing very new initiatives from Kenya Re as a whole in terms of trying to push out new products in the market. One of them they spoke about recently was trying to bring in reinsurance services for especially petroleum dealers. These are new products that really the market has been trying to bring out and advocating for. So all in all, with Kenya Re trying to bring out these new products, I think I'm quite comfortable with where the numbers stand, and I think the second half will bode quite well for them.
And of course, this mirrors with what we've seen in the banking sector. Cooperative Bank reported, some solid performance for the first half of the year, 21% growth, while Standard Chartered Bank, it really caught the eye with 87% growth. Your take on these numbers? Yes,
the banking sector also has performed quite well over the past half year, and not to be left behind, so has the insurance sector. Actually, the entire financial sector as a whole has been performing quite well. Now, Standard Chartered and Coop Bank, they both had double-digit growths in terms of the profitability, in terms of the interest incomes, and also very good cost containment measures. And one of the things that actually I've been keeping a very close eye on has actually been the total capital to the weighted risk measures. That is one of the required prudential ratios, and we actually are beginning to see improvements on that. If we take you back a fortnight or so ago, when one of the reports from Citigroup came out actually questioning in terms of the banking industries, particularly the Tier 1 banks, in terms of their provisioning for a lot of the loan defaults and that kind of a thing. So that is one of the things that I have had a worry on the markets. But with this improving profitability, with this improving total capital ratios we're seeing, I think the banking industry is quite on good ground and solid footing at that.
And Kimathi, you're also expecting results from Kenyan as well as the Kenya Power, and they're considered by analysts as defense stocks. Your thoughts on this?
Yes, the defensive stocks, I think, well, they're kind of all-rounders. When the investment cycles come, the ups, the downs, that's why they're considered defensive stocks. And they bode very well in terms of portfolio moderation, so that in your portfolio as a whole, you don't have too much of the gyrations, because they tend to tether down the performance to an average. But all in all, for the energy sectors, I think the expectation is that they will post some fairly good numbers, and keep in mind that we've seen quite good reductions in terms of petroleum pricing, which is one of the inputs and one of the significant costs that the energy industry as a whole has. So I expect to see solid performance from Kenya Power especially, and KenGen 2, with them bringing on additional power generation capacities, I think they also will post quite some good earnings.
Moving on, Kimathi, we've seen BAT just making an announcement this afternoon. They've said that they've appointed Jonathan Siano, who is a MD at Uchumi Supermarkets, as one of the directors. What could have led to this decision?
Actually, as investors, we are very increasingly beginning to take on the aspects of corporate governance, and the CMA has come out very, very strongly on issues relating to corporate governance. So by having Jonathan Siano, of course, his caliber is unquestionable, his experience is fantastic, but one of the concerns is too much cross directorship in too many companies at times may bring in issues of corporate governance concerns. So, and this morning actually we also saw that the CMA is coming out to also kind of put some question marks on one of the directors at Everready. So we are increasingly seeing a lot of corporate governance highlights on the Nairobi Securities Exchange.
Kimathi, lastly and very briefly, do you have any aspirations for the Olympics team tonight?
Oh yes, so we really do hope to get a few more medals. One more medal will get us at par with our good friends in South Africa, and that's one thing that we as Kenyans would be, quite keen to see. An additional gold medal at least.
We'll be keenly watching that.